Hello and welcome to our viewers on Crux Investor and also to our listeners on Cruxcast, our new podcast series. We're here today with Mark Selby from RNC Minerals. Hello, Mark.
Matthew, how are you?
Very well, thank you. Now, we've both been at the one-to-one conference.
Yes. Very busy, lots of activity.
Yeah.
No, it's good.
Good year, lots of investors?
Lots of investors. It's nice to see.
Perfect. So why are you over here? Who are you seeing?
Yeah, basically just to get the word out in terms of, spread. We had the big discovery in September. Obviously, people are interested in that, but, to give people more behind Beta Hunt and more behind Dumont, because we've got a lot of milestones coming up on both.
Perfect. You've got to go and tell that story. So look, we spoke online last week. I had an amazing response, some very, very positive response from a lot of people. Mm-hmm. But still some questions.
Sure.
You're here in London with us.
Yep.
I thought I might take this opportunity to ask some questions on behalf of our subscribers and some of the people all across social media, if you don't mind. Okay.
Yep.
So key driver for them, share price, share appreciation. That's how they make money.
Yep.
Okay. So looking at the Hayward report, recently broker report, they're targeting you at 75 cents, which is great.
Yep.
Obviously not there at the moment. So just help us understand how you think the company's going to get there. So if I look at some of the questions again sent in here, people want to understand a little bit about the exploration phase that you're going through with Beta Hunt.
Yep.
So give us an update on that.
Yeah, no, we're in the last phases of a 40,000 meter drill campaign. I think in terms of the share price has drifted lower. Again, we haven't showed up with a bunch of large shiny boulders, and we haven't been. I wouldn't say we haven't been focused on promotional exploration at this point in time. It's really about building out the resource, which is something that we've always wanted to do with this asset. We're now wrapping up that phase of the resource drilling, and now we're turning to the exploration phase. And again, we've try and drive home that yes, and we will find a lot more high grade gold, but this is really about a very large gold potential here. We've got 4 shears and 4 kilometers of strike length that have been identified from the 700 kilometers of drilling that was done for the nickel that basically highlighted the first few meters of where all these shears are sitting. So that final 5,000 meters of drilling that'll happen over the next month or so is basically really to do the step outs, to give people a sense of how long and how deep this thing could start to look like. And really get to what we think is the multi-million ounce potential of the resource that's there.
Okay, I mean, because it's interesting actually, because I think one comment was, oh, what happens if this is a one-hit wonder, right?
Yeah.
I mean, it was an exceptional find, but it isn't a business in its own right. So, and I can't help but look at the team that you've put together. And these guys have been there, done it before, and they're very rigorous in their process.
Yeah.
So, what is your strategy? You're doing the step out program.
Yeah, we want to build.
What do you want to achieve?
Yeah, we're building the base mine, right? That's going to fund the exploration, so that hopefully we won't have to go back to the market to fund drilling in the future. And so, with a solid base business in place, then we can start to really sort of stretch out what the exploration potential looks like and what the high grade potential looks like. Again, I think, there are people ask, is it a one hit wonder? Are you going to find any more high grade gold? And I would point to, there's a couple slides in our investor deck, one where, we basically show all the 100 gram plus and 300 gram plus intersections that are scattered throughout the mine from the nickel drilling. Again, they weren't even drilling for gold, and they bumped into dozens of high grade intersections throughout the mine.
Right.
In our current drilling program, I was fully expecting to actually not hit any high grade gold because again, 20,000 ounce of the 25 came from basically about 2 tons of rock that was the size of a dining room table. So statistically to hit that with the drill hole, the spacing that we're doing is actually rather remote. So the fact that we hit a 7,600 gram per ton drill hole, which is the highest grade, the only 2 mines that have done better than that the last few years are Fosterville and Brucejack, which are both pretty good comps, and a pretty select group to be part of. And then we've hit a 2,200 and a 1,400 gram intersection. So, and on different shears and across the mine. So I think, in terms of more high grade, I can't say whether it's going to be tomorrow or next week or a month, but we will hit more as we go forward here.
But you don't need it.
No.
Right?
No,
so
we want to make sure the base mine pays for itself.
They're a bonus.
They're a bonus.
The fundamental business is a much lower grade.
Yeah.
Okay. You've got some drill results coming out. You've got a resource coming out end of Q2?
Yep.
Right, okay. So
yeah, we'll have a resource update out the end of Q2, and then we'll be putting together mine plan and reserve through Q3.
Right.
And that'll be the basis for which we fully re-ramp the mine up. So we've taken the mine up to about 40,000 ounce run rate. We'll kind of stay there for the next few months as we understand exactly what we have.
Right.
And then we'll look to ramp based on, we'll trade off capital versus run rate, and that'll, we'll make a decision as to, where we ramp the mine up to.
Right, okay. And so, I mean, obviously, you're looking at the AISC at the moment. You're always looking at reducing costs, and because you can control that.
Yep.
You can't control grade, but you've got some pretty good indicators to date.
Yep.
At Beta Hunt.
Yep.
Yeah. So what is the process that you're going through with regards to the AISC? What are the things you look at? It's not just about the mill, which we'll talk about in a second.
Sure. Yeah. No. I mean, the mill is obviously one component of it.
Yeah.
And then on the mining side, what's encouraging for us is that we've got these big, broad intersections of anywhere from 2.5 to 3.5 gram material. So that gives us a lot of tonnage to work with.
Yeah.
And then within that, there's a number of 5, 8, 10 meter width wide, 5, 6, 7 gram intersections.
Right.
So that gives us some ability in terms of how we decide on the shapes of the stopes to be able to play with that grade a little bit. So are we is it better to be close to do more tons and closer to 3 grams, or is it better to narrow it up a little bit and be closer to 4 grams in terms of what the grade is that's going to come out of the mine? And again, it's just a pure economic trade-off in terms of what gives us the most value.
Yeah, okay, I understand. So okay, well, why don't we talk about the mill, because that's like a big component of reducing the AISC when we talked last week, right? Big question people want to ask is, so how do you justify spending $50 million on an asset like that?
Yeah. Oh no.
What was the thinking?
Sure. So for that $50 million Australian, we picked up more than 1.5 million ounces of resource and a 400,000 ounce reserve. Just the near-term mine that's already proven out, and that's part of the mine plan. That'll generate $10 or $15 million of cash flow, from us. So you sort of take that off the purchase price, and then you're looking at basically 35 to 40 million.
Is that a net number when you say 10, 15?
Oh, 10 to 15, that's just from the, that assumes that we find no other ounces from the mines that, we're looking at. But there's still a big...
But the question is, that's a net amount from processing that...
Just ore from the resource that we're buying.
Okay.
So in terms of benefit to Beta Hunt, we're picking up a mill for $30 to $35 million that 12 years ago was built for $80 million and would cost you probably $100 to $120 million to replace today. So when you get capital for cents on the dollar, that helps add value.
So let's talk about the mill very quickly.
Yeah.
So again, another question from subscribers and viewers is, what condition was the mine in? Because I think there are 2 reports out there that I'm reading about. There's a 2018 report which suggests that it needs a lot of work.
Yep.
And there's a second report which suggests that you have acquired something which has been updated.
Yeah.
So what is it?
So we've acquired something that's been updated. So they've spent the during the past year, they've refurbished all the sort of the upfront crushing circuit.
Right.
And so that's been rehabbed. They were processing ore from with the mines that they had, and one of those operations is Mount Henry, and it's a very hard ore. It's also lower recovery, and so again, I think if there are people who went back into some of the West Gold quarterly reports and see some of the costs there, and they're kind of going, oh geez, what have these guys bought? The very nice thing that's happening is Mount Henry is getting turned off. Yeah. And they're about to bring on a deposit called Blue, which they acquired from S2 Resources. It's very soft, 90% plus recovery, and it's only 10 kilometers from the mill as opposed to 85 kilometers now. So it's a structurally much lower cost ore that's going to be feeding in the mill, as well as ore from Beta Hunt.
Got it, okay. And is there anything left to do in terms of, because this strikes me, this is like maintaining a car. If it's got moving parts, they are going to wear out.
They need to be maintained, and they basically just overhauled the car, basically.
Got it.
And we get the keys and get to jump in the car after it's just been overhauled.
Okay, so you talked about hard rock, soft ore there. So what is this mine set up to do? Because mines we've looked at in the past, they're great at processing high grade or low grade or certain types of mineralization. So what is this set up to do?
Higginsville, there was a few deposits there that were, multi-gram per ton open pits.
Yeah.
They processed very well. The 2 things that we need to get the 94% recovery that we've gotten from the best mills that we've told that in the past is basically enough crushing and grinding capacity to get it to a certain size. We don't need it to get it very small, but we just need, there's some mills in the area that don't have enough capacity.
Right.
So this mill is got more than enough crushing and grinding capacity to get our Beta Hunt ore to the optimal grind size.
Okay.
And then the second piece is, because we obviously have a lot of coarse gold,
Yes.
you need a good gravity gold circuit that that captures that gold rather than having to get trapped in the various parts of the mill. So this also has a very good gravity gold circuit and allow us to maximize recovery from the high grade from Beta Hunt.
So remind me how much ore is it processing?
It's a 1.3 million ton per annum plant.
Right, and can you feed that? Have you got enough at the moment?
We should. I mean, we'll see where. Again, it depends on where we come out with Beta Hunt.
Right.
But between Beta Hunt and Baloo, we're going to be we're going to be pretty full for quite a while. And then the other part is we've already been approached by different parties in the area who have tolling material available. So again, it just becomes an economic trade-off.
So have you inherited any contracts as part of this?
Yeah,
deal?
there's basically one set of tolls that conclude in June, and after that, the capacity is 100% ours.
And you're going to make that decision and say, right, we're not going to renew that contract. We're going to just process our own stuff, or at least have the optionality of.
Well, we've got the optionality, and we'll make the decision between processing ore from site, from Higginsville, or do third-party tolling, whatever's going to give us the highest return. Right.
Now, you said you used an amazing phrase with me, which I'd not heard before, and I quite liked it, which was, there's the time when you want to do the deal, and then there's a time when you can do the deal, which I thought was beautiful, because there's lots of things that applies to. So in this case, what was your actual timing for perhaps going out and buying a mill?
Yeah, it would, once we have the Beta Hunt resource update done, we've got sort of a better view in terms of how much we're going to be mining, from the mine. Yeah. Post that would have been, ideal. The reality is this was available. Yeah. There was very few mills, and there's a number of mills in the area, but as everyone sort of focuses on the U.S. dollar gold price, and it's been sort of
it's been an unusual year.
Been a pretty weak year, but in Aussie dollar gold terms, we're close to all-time highs. So in terms of gold
what
production,
does that mean? When you say, explain to people what the difference is there.
Yeah, so the Australian US dollar. So when US dollar gold was $1,800 an ounce, the Aussie dollar was at par to the US dollar. So for an Aussie miner, you're basically all the vast bulk of your costs are all in Australian dollars. Right. So you're seeing $1,800 Australian when US dollar gold was $1,800 an ounce. Today at $1,270 US an ounce, we're still the Aussie dollar gold price is over $1,800 an ounce.
You're benefiting from the exchange rate.
So in terms of for the Australian miners, things are as good as they've ever been.
Right. Understood. Understood. So Higginsville, your strategy was not necessarily to buy it now, but it came up now. You've done the deal. Yeah. So you recognise that perhaps the timing could have been different.
Yeah, I'd love to do it have done it at a higher share price, which I think is going to happen after Dumont feasibility study's done, after the Beta Hunt resource is done, and after we pull out the next load of high grade gold. Right.
But you don't always get the choice. So what would happen if you hadn't have bought it now?
No, I mean the risk is we had tolling capacity that was in place. Yeah. Again, that cost us $15 a ton more than what we have now. Right. And again, as you go into a resource update and start to look at what the reserve looks like, when you can take $15 a ton out of your costs, that has a dramatic impact in terms of what you can do with the resource and the reserve to generate a much more total free cash flow operation.
Okay, so is there anything else that you think you need to say or want to say with regards to giving people comfort that Higginsville was a smart decision? Because I imagine it wasn't a decision taken lightly, casually. What do you
it's a relatively new mill. Right. It's the right size, for Beta Hunt. It gives us some growth. We pick up a pretty big land package in one of the most prolific gold camps in the world. Yeah. We get $10 to $15 million of NAV immediately, plus it'll be mining there for a very long time from the Higginsville assets, and we save $15 a ton on Beta Hunt versus what we had in the past.
So that was the thinking. That I guess the unknown there is the exploration upside potential. Yeah. You expect there will be some.
Yes. Yeah.
But we don't know what number.
Right. Okay. And we're not expecting any exploration downside.
Well, there you go. I think you have to do that. You say, what's the worst thing that can happen? If there's no exploration upside, is this still a good deal?
Yeah. Do you think it is? Yes, it is. Yeah. Okay. If we find 0 ounces beyond what we're going to
Right.
take out of their current
Still
mine
makes
plan,
sense.
it's still a massive home run.
And to do that exploration, how would you finance that?
Yeah, it'll basically, we'll make an exploration trade-off between incremental dollars from cash flow from from Higginsville or
So
Beta
that's
Hunt.
a timing issue.
It's a timing issue
On cash flow. Okay, fine. Next section I want to talk about.
Sure.
Or rather, your followers, your audience following the RNC story, is finance. People want comfort around dilution. I mean, of course they do. It's the overarching theme here. I think you mentioned to me Dumont fully funded through to FS, at which point you're looking at JV strategics / JV partners who would finance it moving forward. That's a big project which we can talk about a little bit if you don't mind at the end.
Sure.
But with regards to Beta Hunt, is there any more financing?
No, in terms of getting the Higginsville mill deal, we're looking at some other options which are completely non-dilutive.
Non-dilutive.
Yeah.
Okay.
And that'll provide us the capital to get the Higginsville deal done and to basically get us on our way going forward.
Okay.
So
good. And same for drill programs, not just Higginsville, but Beta Hunt in terms of drilling, in terms of capex, opex.
We'll be fine. I mean, where it'll come down to, as we look at the mine plan, we'll just need to make a decision. There'll be the nice thing with Beta Hunt, because the main infrastructure is in place. It really comes down to sort of how much incremental to capital development we want to do up front to get to, do we want to get to 60,000 ounces? Do we want to get to 80,000 ounces? Do we want to get to 100,000 ounces? And again, I can't tell you,
but
what that's going to look like.
Yeah, but you're going to sit down at that time with a spreadsheet, as we all do, and say, what makes sense now? Do we spend a lot of money to get there quicker, or do we take our time and it's a longer life?
No, exactly.
Okay. Another kind of comment which came back, a comment you made last time, I think I understand it, but there's some people who perhaps may have misunderstood it or are unsure of what you meant, okay? And that was with regards to an exit, okay? You said, if we sell in September, that's fine as long as it's the right deal, but if I have to build this thing out, that's fine too. Okay, so what did you mean?
I am laser focused on where the share price is ultimately going to get to. And in a mining company, you always have to make a decision between realizing value now or realizing value in the future. And all I was throwing out that again, there's a scenario where if we have a great resource update and the drilling, this exploration drilling is successful, we could very easily get a knock on the door from one of these Australian mid-tiers. One of them just took out Atlantic Gold.
That's right.
And so they're cashed up. They have well-valued paper. They all have production. Many of them have production profile, resource profile issues, and so we think Beta Hunt can become an attractive asset for a lot of those companies. On the other side, on Dumont. Again, the EV story is getting lots of traction. Dumont is really one of the only, nickel cobalt assets that can deliver nickel and cobalt, by the early 2020s in meaningful volumes. So again, it's quite possible that somebody shows up in June, July, August and says, hey, we'd like this asset. So again, there's nothing imminent. I just wanted to sort of make it clear that we'll realize value when it makes sense, for shareholders.
I think that's the point to make. And you are a significant buyer, I remember you saying. So, everyone's aligned, which is great. Sorry, I did mean to ask on the Higginsville deal, when's that due to close?
June 10th.
Right, okay. And there's some of these contracts which are running through to June 30th, which you're going to let expire. Okay, fine. We need to talk about shareholders. We talked about some people being vocal, people like Eric Sprott and others who are looking for you to talk more to the audience, to the marketplace. You've said you will offer more guidance and talk more with more news flow, and I guess there's a lot coming up. We've talked about a lot of those things. Have we not? So, do those larger shareholders have any influence over the way that you operate your business? I just want a clarification for some people.
No. No. We do as a management team. Shareholders trust the management to do what they need to do to run the business. And so I don't get any calls on specific issues one way or the other. So.
Okay, great. If we could talk about tolling. Okay. I guess with Higginsville,
we'll stop.
Is it a real simple one?
Yeah,
You're going to stop?
Yeah.
Okay, the
We're
timing of
basically
that?
wrapping up our last toll with our current third-party toller, literally as we speak.
And what's the overlap there in terms of?
Well, it just goes. We're trucking to one location, and we've already started trucking ore over to Higginsville on the assumption that we're going to close. Right. If we don't close, then we'll do it as a third-party toll. Got it. But we've already made that shift.
Fantastic. Okay, I hadn't appreciated that. Okay, well that gets rid of a lot of questions for me. Just so generally, because again, we've done some analysis.
Yeah.
People can look at that on our website in terms of how we grade companies. If I look at all the variables, all the moving parts, and I put a dollar sign beside each of those, like, okay, for me, the infrastructure at Beta Hunt, you put a number of 400 million. Is that 400 million to build it new?
Yes.
What's a fire sale value? What would be or red book
no, I mean the fire sale. I mean the value of that infrastructure is really predicated on the resource below it, right? Sure. So, and we bought it for we basically bought it for $12 million 3 years ago. So
but that's I'm trying to put some sense around what does 400 actually mean. 400 means if we tried to replace it today, that's how much we'd have to spend. Yes. Right. Yeah. Okay, but if you were selling that equipment and someone's coming in and moving it, is that a reality? So it's not so much. Is it a real number?
No, but I think where it becomes a real number is to the extent that sitting below that 5-kilometer ramp system, that we define a gold resource, and we have the potential to define a resource that's sitting directly below that 5-kilometer ramp system, then it becomes real value because as a miner, you're not having to build that main infrastructure to get to that resource.
I get that. So, but how do you put a value on that? Like we talk about, one question was sent in was St. Ives may want to use the ramp system. How do you put a value on that? How does that sit? Where does that sit on the spreadsheet?
Oh, that's always I worked at Inco and we tried to merge with Falconbridge, and they've tried to merge multiple times. Yeah. And then the age-old debate between is the infrastructure to get to the resource the value, or is it the resource itself is the value? So it's really quite hard to put a value on it. But again, it's really about when you put the resource in place and you have the infrastructure, then that values that does turn that infrastructure into real value.
Right, but the question is, we've done it. I'm not going to say the number. I guess you guys have done it, and you may or may not want to throw a number out there. I look at obviously the resource. I can put a dollar number on that, and the reserve coming up, Beta Hunt there. Dumont, clearly is in a very exciting space. Yeah, very exciting space. Yeah, cobalt, nickel, amazing. Very few good deals out there, right? The potential value of that when you get a strategic investor, I can put a dollar value on that. Yeah.
Oh, and it's tremendous. And again, a really good rule of thumb is, if you look at, and you can go, this has held up very well over time, that, world-class base metal assets, which Dumont does, is the 5th largest sulfide discovery ever, qualifies. Basically, they exit at, anywhere from 0.8 to 1 times NAV. Yeah. So, when the updated feasibility study comes out, you'll see the NAV number. We'll have 28% of that, and so ultimately, there's no reason in my mind why a strategic at some point in time wouldn't want to acquire that asset for close to that value. Yeah. So again, it's not recognized today, but it's something over 12 to 24.
Well, that's where I'm getting to. Yeah. Okay. So I'm going through this process, looking at moving parts. I'm putting dollar signs on there, heavily discounted. Yeah. And I look at your market cap. Yeah. And I go, what is happening? Yeah. Because this is one of the better companies that we've spoken to in a long time. Yeah. Based on what I'm looking at, you're not getting that reflected in the share price. What's happening?
Yeah. No. I think we haven't shown up with a lot more high grade gold, so there's a bunch of investors who are expecting that to pop up regularly. Right. I think on a couple of conventional metrics, if you just look at EV per ounce, again, we don't have a large resource that's in place today at Beta Hunt, and so. But I think realistically, again, at a $200 million market cap, we're trading for half the value of the infrastructure at Beta Hunt, and you get Dumont for free.
Do you think it's because you haven't been talking to the market enough? I know it's something that you're addressing and you are going to. So, was there something in what Eric Sprott said to the market a few weeks back? Is it because you've been too busy focused on business?
Right. I think probably, you know, I mean, we haven't been talking to the market as much. We've been out there sort of off the initial wave. We were waiting for this sort of next wave of news flow to really get active in terms of, you know, because there'll be more to tell. And I think, you know, the other part of it is, you know, the stock, again, it's come along, you know, still, you know, we went up 13x. In 2 weeks, we've come back, but we're still up over 4x. So, you know, for a lot of investors, you know, coming in, if you got in, it's your great return, and it's like, okay, well, you know, do I want to step in at this kind of valuation?
Do I see more value?
You know, do I see more value? So I think, you know, that's where, you know, I think once we get the exploration drilling going and really start to have some, wow, okay, this can really sort of demonstrate what the scale of this asset could really look like. And then I think when we get the updated Dumont feasibility study to make it very real for what the value is, that'll be up before the end of the quarter.
Before the end of the quarter,
you know, so I think that'll make that, you know, a very tangible, you know, value for investors. And so, you know, again, I think, you know, those things can, you know, help re-rate the stock and help, you know, really start to push it higher.
Right. So give me a summary here, because I've looked at your team. They're smart guys. Okay. Been there, done it. Okay. They're smart guys. You've got your strategy. When you came in, you had one strategy. You've kind of had to adjust it slightly as, you know, results come through. You're constantly evaluating. So you're very clear about what you needed to do then. That's share price appreciation. It worked. Right. So what is the thinking now about how you move forward, how you create this value that people can look forward to?
So on the beta hunt front, it's basically establishing it as a cash flowing asset, with the reserve update that's there, and then start to highlight what the scale of this asset could be. That would make it very attractive to people, and people need to think about it as a potential takeout target. And what that value looks like. And then on the Dumont side, again, once that updated feasibility study's done, the permitting's all done. You know, it's literally comes down to financing, and we got well down the path in 2014-15. So, you know, as that moves closer to construction and you start to see a lot more activity in the space, you know, that value between right now 0 and that 0.8 to 1 times NAV, you know, we'll really start to.
What's your sense of the EV? I mean, we've been speaking to a lot of battery metal companies over certainly the past few days, actually. There's a lot of excitement about that space. You know, you have got to be careful about when you want people to come in. So the feasibility study is a big potential revaluation moment for you?
Yes. Very much so.
Okay, right, okay. Look, Mark, appreciate you coming in. I know you're busy, you're at the conference and you're whizzing around London speaking to investors. So, you know, thanks for making the time to come and see us.
No, always glad to.
I think some of some of our subscribers and some of the guys on social media and various chat rooms would be pleased that you're, you know, getting out there, responding to them and answering these questions. And if we have any more questions, can we come to you?
Anytime.
Perfect.
All right.
Thanks for coming in.
Thank you, sir.
Good to see you.
All right, take care.
Okay. Thank you very much for watching our video. We do aim to give you informed and intelligent information with which to make your investment decisions. So if you liked what you just saw, please give us a thumbs up. And if you want to see more insightful, in-depth, honest and unbiased interviews, then please click the subscribe button. So thanks again for watching, and we look forward to seeing you again soon.